Want to get straight to the markets for you now and just checking in on the state of play for the euro, really continuing its slump against the dollar. Investors are ditching the single currency after Moody's said that it will start to review ratings for all EU countries. European stock markets also struggling this session. All of the main markets are trading lower. Amongst those, we're seeing the FTSE MIB really leading the declines this session of more than 2%. And then despite a debt auction that will actually meet its maximum target and pay less, yields on its 10-year bonds are still continuing to rise. You can see right now we're at 6.63%. Nervousness too perhaps over on Wall Street, with US equity futures moving lower, clearly signaling a lower start to trading today. So we'll get the full details on that from Dom Chu in New York in just a moment. First, I want to check in on what's happening right here in Europe with Manus.
Miriam, there's no doubt about it. Sentiment is shifting. Stocks are declining. The euro's declining. You've gone through some of the headlines. The head of the Bundesbank, Mr. Weidmann, said it is down to governments and not the European Central Bank to resolve these crises. It's almost like deja vu of where you have the head of institutions putting accusations back on the politicians. Moody's, no doubt about it, the rating agencies was the critical issue. They said few measures have appeared to diminish the risk of a credit ranking revision. UBS, you've just interviewed George Magnus. AAA downgrade is inevitable. So with that in mind, let's have a look at the bond market. Italy came to the bond market today, 7 billion euros worth of 365-day T-bills. Okay, they paid a little bit less than they did the last outing, and the demand dipped. But I want to show you the last 5 big political gatherings, March, May 2010, going into 2011. We've had 5 blockbuster meetings. Default insurance still rises. Put this in context. Back on the far left-hand side of your screen, $50,000 to insure yourself on 15 of the sovereigns in Europe. Today, this morning, I can tell you we're rising again on default insurance, $376,000 per 10 million. Also, the reluctance to lend between banks. You're back at levels not seen since February 2009, and the premium that that banks pay to convert their euros into dollars, you're back at 5-week highs. Also, Miriam, just take note of this. What are banks doing with their money? They're putting it with the European Central Bank. We've seen the highest level of deposits in 18 months, 334.9 billion euros placed with the ECB. That's up from 310. However, they are borrowing less. Check out the banks. We'll finish with this. The UK banks, RBS, Barclays and Lloyds, all declining, and you are seeing a similar picture across the French banks. There's a definite shift in sentiment. Look at this, Lloyds, RBS and Barclays and the French all declining this morning, Miriam. A distinct shift with declines in those as an industry.
Thanks so much, Manus. Well, that brings you up to speed with what's happening right here in Europe. Want to head over to the other side of the Atlantic.